You know, I was listening to Anka, and you know all the valid indicators that she uses to judge whether a trade is valid or not, and the way she picks targets, very intelligently done. And what strikes me is there's just so many ways to cut it as far as trading is concerned. I tend to do it a whole different way. I think, you know, for me, I've always felt that it was the mental and emotional part of trading that that is the difference. And if you can run a trading plan where things are simplified enough that what you have to do is very clear, and you can eliminate the rooting. I call it rooting, where you're looking for something to happen and you're wanting something to happen, and you kind of sit there and root. It's okay to root if you follow your rules, but when you start rooting, sometimes you can talk yourself into a trade or two. I'm going to take this this 50 or 55 minutes in maybe a little bit different approach. I'm not using any PowerPoints. I'm just going straight to the charts. This is one of the This is one of the pages that I arrive at when I first look, just kind of taking a look at the markets. I think it's important to let you know that the first thing I do in trading, because it's really just as important as where I buy and where I sell, is my pre-work. And my pre-work involves first listening to a subconscious training, something to get my mind focused, either something that I want to work on from the day before, maybe that challenged me. Maybe I lacked a little patience that I should have had the day before. Maybe I'll take a mental training for 6 or 7 minutes on being focused and the importance of focus. And then I do some journaling. Usually, now I'm not a guy that journals a whole lot. I journal about 3 or 4 minutes before I start trading, and after I start trading, maybe I'll journal 8 or 10 minutes. But in the beginning, I just give myself some positive feedback in written form. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. Today, it's going to be a great day. Now, if I'm working on something, if I'm noticing that, for instance, lacking patience, I say, today I will demonstrate that I have solid patience when I trade. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. And I write that down. So those are my you know, I listen to a short meditation, and then I write down something that I want to make sure that I focus on, give myself some positive expectation for the day. Then I start trading. Okay. The first thing that I look at, I get a general feel of the market. I have some of the stocks that I watch. I'm generally a commodity trader, so I'm looking at the crude and some of the bonds here in the S&P, the full contract, and then I see some grains here. The metals are here, currencies here, but I concentrate primarily on this screen when I'm trading in the last few months. This is a screen of the I've been working with a trading plan called Loaded Gun, which really I've been working with the last 18 months, and it's really the primary trading plan that I offer. I call it Loaded Gun because of the entry setup, and I'm going to show you that in a second. These are, and I use bar charts. This is a 2-minute chart. This is a 5-minute chart where each bar is 5 minutes. I'm going to talk through a little bit of the elementary stuff, hoping that you have some experience with reading charts and so on. I've learned not to take anything for granted, but I'm going to put that learning to the side and talk as if you understand all the basics. And this is a 60-minute chart. Okay, usually I'm looking to trade in the 2 and the 5, but sometimes I can get a feel for the general market personality from the 60-minute chart. Okay, and then here I have where I can execute a trade. So this is the micro S&P, okay, the micro E-mini. That's what these 3 charts are. Then I also watch the micro gold, which is a terrific contract for smaller accounts and larger accounts. because you can kind of phase in and out. It's very small pieces. A normal gold contract is $100 per dollar moved. In these micro contracts, it's $10. So you can literally take on a couple of these in a $10,000 account and be very, very comfortable with your risk exposure, because that's really what you really want to focus on in any size account, but especially the smaller account, the exposure to risk. Now, I've been focusing really on helping seniors trade, which is really, it may be a misnomer, because everybody should be concentrating on the things that seniors concentrate on. Seniors should be concentrating, of course, on the risk and keeping that small. They should be concentrating on a simple trading plan that they can follow without confusion and hesitation, something that they can just continue, and something that's repeatable in a very simple way. And I'm going to show you the way I do that right here today. The bottom set of charts are 3 charts in the crude oil. Notice that Anka trades the crude also. Love the crude. Now this is a contract that's a half contract in crude. The mini contract in crude is a half contract. So it still has some power. You got to be careful here, because crude can run, especially be aware of your reports, etc. But this is the 2-minute, the 5-minute, and the 30. Okay, I tend to change these as the market's going on and I'm getting interested in looking for a trade, and I'll show you a little bit about that coming up. Okay, let's take a look at let's look at how I do trades, and maybe we can find one as we're talking. Let's concentrate right now on the micro S&P. Let's look at the 5-minute. This is the 5-minute micro E-mini chart. Okay, now what I look for, I'm gonna blow up one of these formations here to show you the trigger. Well, I guess I could blow it up a little bit better than that. Let's kind of look at it from here. Okay, here is what I'm concentrating on, and I want to do one more thing. This is a trade right here. This would be a buy signal right here, and I'm going to show you why. This simple trading plan, Loaded Gun, is called Loaded Gun because it focuses on what the trigger looks like. This is these 2 bars. Actually, this is a doji, but it's in a 5-minute time frame. The market traded in this price range, opened and closed literally at the same price. Why it looks like a cross. If I were dealing with this, I would be looking at a market that opened here and closed here, because red means the close is below the open, and the body is the body shows you where the open and close range occurred. The wick above and below the body are trades that occurred outside the open and close range. Okay, so when you get a doji like this, or even a very small body like this, doji, small bodies, but what I'm looking at is this. When you see a doji, that is indecision. So now the market is trying to decide where to go. All right. If the next bar has a definitive move like this, a strong move in one direction or the other, and at the same time crossing the 8-bar exponential moving average, and that's what this is. This is my kind of golden moving average. This is when you have a indecision followed by decision, where the body moves very convincingly through the 8-bar exponential moving average. This is my buy signal. Okay, this is where I buy. Now, I always buy 2 contracts, and the reason I buy 2 contracts is because there's 2 kinds of trading that gets to your head. And let me explain what I mean. And I don't want to start feeling bad about what I'm doing or wishing I did something else. These are the 2 things that in my 40 years of trading and coaching, these are the 2 things that run in traders' heads. You put on a trade, the market goes higher, and you take a scalp. In other words, you grab what the market gives you quickly, you grab a nice profit. But then the market continues to move much higher, and you say to yourself, gosh, I wish I wasn't such a scalper. I wish I was more of a trend trader, not a position trader, but a swing trader, and had let that thing ride until I got an exit signal. And, you know, gosh, maybe, and you kind of think maybe I should flip back and forth. The other is the position or the swing trader who lets a market ride and then sees it come all the way back, and then sometimes to a loss or break even, and you say to yourself, boy, I wish I would have taken that profit when I had it. I should have taken that first, and I would have been on to another trade. I didn't have to spend all this time watching my profit go away because I didn't take it. And so you've got two things going on. You've got a scalper mentality in your head, and you got a mentality that you want the market to ride, in a swing trading mentality. If you can satisfy both those urges in one trading plan, you've got a trading plan that you can follow a lot easier. And that's what I'm showing you here. This is the reason I buy two positions here. So I'm buying two micro E-mini positions here. And what happens is when I buy here, okay, this is why it's called a loaded gun. This looks like the trigger part. This looks like the barrel of the gun pointed skyward. So that's why the system is called loaded gun. I think I could have found a better name for it. Now you look here. Well, let me just continue this trigger right here. So you buy two right here. The first thing that you do, you buy two. The first thing that you do is put your stop below whichever of the two bars we're dealing with in the trigger, whichever is lower. In this case, they're both the same. You put your stop a tick below, 2 ticks below, 3 ticks below, whatever your personality is. Some traders live by, well, they're just going to take me out for a tick and go higher. Some say, well, so I'll put it 2 or 3 ticks below, or four ticks below. Sometimes a trader will say, well, you know, they'll do that anyway, so I'm just going to minimize my loss as much as I can and put it a tick below. It really doesn't matter. Kind of a decision you need to make. So you buy here on the trigger. Once the market closes above the trigger formation, you buy two here. Then you put your stop in to sell two below the formation. And the next thing you do immediately is measure this body and then extend that measurement higher from the close. So you would put a limit sell for one of those two positions right here. Okay, so you're measuring the body, you're selling one here. Okay, now and then as long as we're staying on the correct side, on the upside of the 8-bar exponential moving average, you don't really have much to do. Okay, so you have your stop down here. When you get your profit taken, in other words, on this bar, and I'm going to just come back on what happened here, but when you would still be in this trade in the system, okay, and when the market, at this point, with this bar, you would have hit your limit sell right here. In other words, that sell again was measured by the length of this body extended higher in the direction we're going. So you would have put your limit sell in for one here. You would have taken your profit on one position here, and then you would move your stop immediately from break even, from down here below the formation to break even. Okay, now, or a tick above break even. Some people like to cover the cost of transaction, and I'm fine with that. Okay, so now you're riding a new. Now you've got some money in the bank, and you're allowing this thing to ride higher if it's going to. Okay, so in this particular case, I don't know how this. I'm going to assume the market opened here in this 5-minute period and came up. Now, when we bought here, nothing much happened here. We did see a close below. What I like to do is, and I can't discuss or go through all of the sell rules, which are, there's about 4 or 5 of them that you need to know, but that's all that you need to know. I'll get into kind of one here. I wanted to make sure you knew the trigger and the basics of buying two, putting your stop down here, putting your sell in for one, and then moving your stop on the remaining position to break even once you've taken your profit on the scalp. Here is, but if you have two closes below the 8-bar exponential moving average, I would be out of the trade in most cases. We have something we call nuances, and I'll explain what that is in a second. So in this particular case, I had my first close below, even though it's just a hair, it's below. So now I'm on alert about taking, in this particular case, I hadn't taken a profit yet. I bought 2 here. I had my limit sell on 1 right here, had my absolute sell stop down here, and now I'm watching the market go. So as the market, in this particular bar, we closed below. So I'm on alert. I don't want to see that second close below if I don't have to. It didn't happen. We had to move up. We were able to take our profit, move our stop to break even, and now we're continuing here. Now, right here, you would be stopped out at break even on your position, okay? So that is, so you would have had your scalp and you would have been break even on the second trade. Okay, that is the end of that particular trade, okay? Now, here's another trade right here where you have a doji and an extended bar lower. Now, there are nuances that I mentioned, and in general, this is a trade that I likely would not have taken because I like to see when I don't see a very strong move, I like to see bars taken out, the lows in this case of bars taken out. But let's get into some of the let's go further. I think I kind of exhausted this. All right. So let's continue. This is where we left off. There's no trades here. Now here is a trade right here. Okay. We have a doji followed by a move lower. Now this is not a very strong move, but it's good enough as it's taken out a few lows here. Okay, and it's, you know, I'm going to back up here. I'm going to back up because I want to show you a losing trade. Okay, here is a trade right here. Here is a trade right here that is a losing trade. See if I can separate this a little bit. Yeah. Okay. Here is something. This is a very nice signal in our trading plan. You've got this is not a doji, but it's a small body. Okay. The trigger can either be a doji, which is the favorite, or a very small body like this. That's at least 3 to 4 times this. The extension bar needs to at least be 3 or 4 times the size of this body. So because you need the indecision followed by the decision. Okay. So here we have a small body followed by a dramatic move up in comparison, taking out a bunch of highs. Really like this trade. Didn't work out, but I like the trade. Okay, I didn't know it was going to work out because this didn't exist when I took the trade. Put 2 positions here, buying 2 here. Put your stop in. These are the two bars of formation. Whichever is the lowest, you put your stop in below the formation, and you put your limit sell in on 1 position or half your. If you take 6 positions, you're putting it on 3. Half your positions you're taking here on the scalp. Well, we never reached there. We came down. We had 1, but you see this right here. This is a reversal position, okay? Because we have a doji and we have a movement through, taking out a few lows. So this right here, you would be reversing your position, selling 4 here. I'm sorry, yes, you would be selling 4 here because you didn't take your scalp. You'd still have 2 on. You'd be selling 4 here. So you'd be taking a loss on the first 2 positions from here to here. So you're taking a small loss here. You put your stop in for the 2 positions here, and then you put your limit buy in. You measure this. I know it's short, but we follow the rules because a short, if it's a smaller extension through the 8-bar exponential moving average, it's not as powerful, and therefore the move may or may not be as powerful. But the good thing about this is that you have a shorter risk when you have a smaller body. In this case, the risk is a little higher because we're dealing with what is a bearish signal, which is a shooting star type of signal, as you more advanced traders know. So this is a really beautiful signal because you have a shooting star, but I don't want to categorize it as anything other than an indecision followed by a decision through the 8-bar exponential moving average. The most important thing is this 8-bar exponential moving average. We take this trade, we're selling 2 here, we're actually selling 4 because we're offsetting the 2 from here. We're selling 4 here, we're putting a stop up here on the 2 positions, and we're buying 1 back here at an extension of this body to here. Okay, so we've come down. And on the next 5-minute bar, we're taking our profit on the first position, and we're moving our stop from here, from above the formation to break even. But look what happens here. We've got a really nice, you're going to find out this 8-bar exponential moving average is a very exciting thing if you have them moving it. Okay, so look, this is the kind of formation that would normally get somebody out, and you know, I wouldn't blame them if it was part of your system. I mean, it's not quite an engulfing pattern, but it engulfs most of the trades. This bar engulfs most of the trades here, but that's not part of our rules. We remain in this trade until a couple of conditions happen. I've just mentioned one of the conditions where we have 2 closes above on the other side of the 8-bar, and if we just go with that for right now, this is the first close above. This one, of course, did not close above, and now we continue the trade. So we're still short from this trade. We're still short from here, 77, let's call it 36.77. And we've got 1 close above, 2 close above here. So we're out right here. This did not breach the 8-bar exponential moving average. And anyway, the bar isn't big enough to be 3 times this. So this is not a reversal. 1, 2, so this is where you would be taking your profit in the simplest form of the trading plan. Okay, so you have a nice from 37, I'm sorry, from 77 here, did we say 77? Yeah, 77 to something here to 70. So you get a nice 7 points here in the S&P, plus you had your small scalp. Okay, here is a trade right here. Okay, another doji followed by a move through the 8-bar exponential moving average. Okay, so we have a trigger. We're taking out a bunch of lows, which I love. Again, you're going to learn to love certain things and not love other things. You know, you'll make it part of your rules or you're not. There's a standard trading plan. There's a simple trading plan in this, what I call simple trading plan, loaded gun. And then we have 7 existing nuances. These nuances are there to fit you and your personality. In other words, there are certain traders who need to be trading more. They want the action. There are other traders that are more patient and are looking for more exacting formations. So depending on who you are, you can utilize some of these nuances or not. So they're there to tailor the trading plan to use an individual so that you can follow it. Again, my love, my passion for making sure that you follow your trading plan and having a trading plan that that's built so that you can follow it. Okay, so so let's take a look at this particular signal here. Doji followed by not a tremendous extension enough, but since it's got to be at least 3 or 4 times, and the doji means this is an infinity time. You know, it's, believe me, total indecision followed by something nice like this is good enough. Nice, right through the 8-bar exponential moving average, which is probably the single most important factor. And I like the fact that it's taking out all the lows. Okay, so we're selling 2 here. We're putting our stop above the formation, really nice low risk, and we got stopped out here. Okay, we got stopped out of that. Okay, so not all trades are going to work, but what's going to happen, and you get stopped out right here on this bar because you had your stop here. But again, when you know, it's moves like this that are going to not only be able to capture any of those losses. Now, here's an interesting trade, and I wish we could have taken this trade while we were live. Here is a trade that you may or may not take depending on the size of your account. Doji, okay, followed by a dramatic move lower, and if you can, it would be nice to find a way to take this trade. Okay, now this is a large risk, but it's not so large in a micro account. Okay, you're talking about you're talking about, let's call it 3680 to 3687. 7 points. It's not, it looks like a lot here, but it's not a lot, okay? But so you would be selling 2 here, okay? Selling 2 here, and then let's measure that. Selling 2 here, and if you can't see this, but I can. The open in this bar was 86.50. The close was 81. So we're going to call that 4.5 points. Is that right? Yeah, or 5.5. Let's call it. Let's make it 5 points. And so what we want to do is look at the low here, or the bar where we closed, which is 80s. If we take 5 points, so 81, okay, is where we closed here. So 5 points would be 76. We would have a stop or a limit buy. We would have a limit buy. Let me just draw a horizontal line here, right at the 71 area. I'm sorry, at the 76 area. 81 and 5 is 76. Now, this would be we would have a limit buy in here. And why did we pick this? Because we measured this extension, and then we extended that the same distance to our limit buy. Okay, we haven't had it yet. It hasn't happened yet. Okay, we have our stop up here. Okay, and we'll see how this trade works out. I don't want to. We'll refer back to it. But again, we want to try to take our first profit here on half of our positions. We sold 2 here. We have a limit buy one here. If you have a larger account, maybe you sold 4 here or 6 here. Or if you sold 5 here, maybe you're going to take out 2 or 3 here. But you want to take out somewhere close to half on the initial extension, okay? So we're going to come back and take a look at that. Well, let's stick with it a little bit. If there's anything to look at here. All right, let's, I want to show some of the other, do we have any questions at this point? I know I'm moving pretty quickly here. Let me look at the chat. Chats can be, let me go back to this. Okay, I see a lot of thank you to Anka. Value of the EMA 8-bar exponential moving average. Looking at any trades, yeah. Well, you just saw a trade right there. So let's continue. Again, let's look at gold. Gold is a nice, has been really nice to the trading plan. It's a terrific thing to. Now let's look. I see trades all around here. When you start using the loaded gun simple trading plan, you're going to see all kinds of trades. Okay, and I'm going to go quickly through them, and I'm going to show you some losers as well as winners. Okay, because you're going to have winners or losers. But the idea is that by taking these scalps that you take, you're going to wind up seeing are going to offset the losers, and you're going to be able to come home with the runs in the end. Okay, I don't mean going to the restroom. I mean the ones that you let go. Okay, let's start here. Here is the first signal that I see in this swatch of trades. Okay, you have a small body, so you either have a spinner or doji. You like the dojis, you love the dojis, and you like the spinners. Here's the fact that you've got a few relative indecisions in spinners. I kind of like that too. And you have this dramatic move higher, taking out 1, 2, 3, 4 highs, like it. This is a buy right here. Okay, you're buying 2 here. You're selling. You're putting your sell stop down here for 2 positions. Then you put your sell limit in. You measure this extension. You start from where you got in, the close of that bar, and you're measuring that extension. You're selling half your positions here. So you would have been out here on half your positions, and you would have moved your stop to break even. This is a reversal position, so you would have taken out your last position here. So the second position would have made a profit from here to here. Actually, it looks like about the same as the scalp. But now you're short 2. Stop up here, measure the body, limit buy here, of which you would have taken that limit buy profit on the scalp and this bar, and you would have moved to break even. You continue on, another reversal position. Well, before your reversal, you would have been stopped out in your break even. So this resulted in a scalp and a break even. Here is your next signal. Again, small body followed by a movement taking out a highs, which I like. Not mandatory taking out the highs, but I like it. And again, you know, when you're in the course, we kind of discuss what are the higher probabilities than others. Those that need action, sometimes it's okay to take some of these trades, and we can show you how to deal with that. But from a strict standpoint, there's a beautiful trade right here. Buying 2, stop down here, limit sell on the scalp here, of which you would have taken your scalp here, and you're continuing to ride. This is 1 close below, so I'm all right. Again, I don't want you to marry the 2 closes below right now because you saw what happened in certain reversals. But again, I don't want to focus on the exits, even though that's very important. I just want to show you that we do. I just want to show you where we do have the exits. But again, the exits a lot about who you are as an individual. So your exit strategy may be a little different because I care about who you are as a trader and what upsets you or what brings you off your trading plan. You need to understand yourself, and you know that's, if you know me, you know how big I am on that. All right, you have this right here. This right here is a reversal signal to some and not to others. It may be a place just to get out of the second position. You remember, you bought 2 here, you only offset 1 on the scalp, and now you're riding this one up. You've got your doji. I love these kinds of trades. Even though the extension doesn't look dramatic, it's pretty dramatic compared to a non-extension or the perfect doji where there is no body. But the fact that you're taking out some lows, there is, and going through what I think is the holy 8-bar exponential moving average, this is a nice place to reverse your trade, take your profit, and make a short trade. It's a very short risk. But it paid off nicely, as you're going to see in a second. Well, not so nicely, but a little bit. You've got this body. Again, you don't want to screw around with, well, this is such a short body, maybe I'll take more on the scalp. No, no. You follow your rules. Your scalp was taken here. You moved your stop to break even, and you're coming down. You're coming down. Looks really nice. Now, there are some rules around when you get too far from the 8-bar exponential moving average, okay? We won't go through that right now, but I want to show you the basics of getting in and staying safe in a trade, okay? This is a world of staying safe. All right, here is a beautiful reversal signal, all right? Now, on this, you would have been stopped out at break even. So you had a very small profit, but that's okay. Again, you're going to take a lot of the scalps, and you're going to give back some on the runs, but you're going to grab a lot on the runs, and some of those real big runs where the market really runs, you're going to be in on. Here's a nice. This winds up to be a nice trade. Now, of course, this again, you've got to measure your risk. Do I want to take this trade? Because your stop is down here, okay? So depending on and of course you can mitigate your risk by keeping your position size down, or by waiting till, this is another nuance we talk about, waiting for the market to back up against the 8-bar and take the trade here. Won't go into that right now because I just want to show you the purity of the basic trading plan today, okay? So you have a buying 2 right here, put your sell stop down here, okay? And you gotta love this trade as a trader. I mean, you're seeing, you know, bottoms being established as we move down. You took out this bottom, which probably took out a lot of people, but maintain this bottom right here. You have a hanging man, I think they call that nowadays, the hanging man, which is a very bullish, followed by a major extension through the 8-bar exponential moving. That's all I need, okay? I'm taking this trade, and I'm trying to find a way to reduce my trading, my size. So if I trade the regular S&P, I'm going to the micros and finding a way to get into this trade, okay? So I'm going long 2 here. I'm putting my my stop down here to sell 2. I'm extending this body to here, right around here, which would be the extension of this body. I'm selling 1 at a limit for my scalp. The market was very kind to me. I got out of my scalp right here, okay? I got out of my scalp, and I moved my stop to break even right here, which I was stopped out right here. Now here's a reversal signal that you would have taken a small profit, and then you would have maybe, if you did take this, and again, depending on which nuances you take or not, if you did take this, you would have been stopped out here. Okay, so this would have been, you had some gains, you had some losses. It didn't really result in much one way or the other for you in the end. Here's another signal of which, again, you got to measure your risk. You buy 2 here, you sell, you put your sell stop in here, you put your buy limit in here. Up here, again, the equal measure to the body. You would have had been you needed a little bit of patience here as the market closed 1 time below, and you don't want that 2 times if you can help it. There is a way of staying in after 2 times, but again, we won't go into that. I'm talking about the basics. But we remain in the trade, of which we finally take our scalp about 40 minutes later right here. It looks like that would be the place where the extension would have met. You would have been all the way over here until you had this reversal right here. Very small body, extended down. So the second position would have been taken from here. We would have gotten in here, and you would have been reversed here. Okay, but it's a nice reversal signal. Selling to here, putting your stop above here, put your buy limit in here for the extended position. You would have had a nice scalp here, and moves your stop to break even, and you're now again right here. Look at when you extend so far from the 8-bar exponential moving. I'll say it right here. If you just had 1 position left, then you may consider taking it. I mean, that's a pretty big bar. Now it's easy for me to say after I'm looking at it in the past, but suffice it to say, when you get this far from the moving average, you've got a high probability to snap back. And what's the problem in taking a profit from here to here? That's a nice move. You know, that's a 10-point move in the S&P in a 5-minute chart. You don't see that much, okay? But even if you didn't, you would have been out here with on the second. This is not a trade, a reversal, because this is not enough indecision. It's too big a body. So you would have been in, and if you followed the strict part of the rule without any nuance, you would have been out here and given back all of this. And again, you're going to wind up seeing that when you give back in a trade, you're not going to give it back all the time. Again, but you will sometimes. You got to think of it as giving to the, like when I gave 20 dress shirts last week to the Salvation Army. I'm letting somebody else have a little of the fun. Okay, so don't kick yourself for giving back in a trade. When here, look, you took a nice scalp. You took your second position. There's nothing to complain about. Now, when you got down here, you may have said if you sold 3 or 4 here, and if you sold 4 here, let's say, and you took out 2 on your scalp, you may have taken out 1 or both right here. You know, somewhere in this extension. Okay, especially when you started to see it moving higher in the scalp. Anyway, that's for another conversation. Here's another trade. Okay, a nice shooting star. You got to love to see these, followed by an extended move through. Now, an obvious question is, do I care about the wick? And the answer is no. You know, when I'm measuring this, the fact that we're through, I'm following basic rules. If this bar is at least 3 or 4 times I'm going to call it 4 times for this presentation, larger than the body of the other part of the formation in the loaded gun, then it's a trade. I'm selling 2 here. I'm taking out a couple of lows in this one and this bar in here, but okay, I'm not. But I like the fact that I seem to be. I can't even call this a trend right now because we seem to be chopping. But here is a sell 2 here. Measure this, the body. Put your limit buy in here. You would have gotten your scalp out here, move the stop to break even. And here's another signal, okay? So the second position you would have taken from here to here. You would have been long here, 2 positions, scalp position here, okay? You would have gotten out of your scalp, okay? Then you would have been moved the rest to break even, and you would have been stopped out here on what became another signal if you decided to take it. We talk about chop. When you, and the people who are experienced with the loaded gun may or may not have taken this, because you're seeing this chop, and it's occurring where a lot of these other trades have occurred. There's a lot of commitment to traders going long and short in this area. And so I won't go on, but if you did take this trade, you would have been stopped out. But you would have recovered that from this scalp and all the other scalps. So again, the scalping positions, when you take the scalp profit, you'll be offsetting the majority, if not all, of the losing trades when you start trading this. So I think, let's go back to was it the 5-minute chart in the S&P? Okay, looks like this was not a winning trade. Okay, doesn't look like we were able to get, no, well, here's the line, I drew the line. So 1, 2, this would have been a losing trade, okay? This is the second, so you wouldn't have lost the whole thing. You would have been out here, okay, from here to here, okay? So again, not every trade is going to be a winner. Of course, you would have gotten that back with a lot of the other trades that we showed you. And this is the way of trading. You got to keep your losers small, and you got to, when you can, let your winners ride, but also be able to take a scalp. And that's why I've created this. Listen, I've written several books on trading plans. They all, one of them, especially the one that's still available on Amazon. If there's any critique about the trading plan, it's that I care too much about the individual trader. And and in other words, the first third of the book is how you analyze yourself so that you can set rules that you follow. Now, I think that any experienced trader will honor the validity of the importance of that. Okay, so the nuances that we've created in the loaded gun trading plan is something that that honors you as an individual trader and is able to adjust without adding to risk the trading plan core, or what I call the skeleton. Let's look at the crude oil. And here's the 2-minute crude oil, which can be choppy, so you got to be careful. I'm not a big fan of the 2-minute crude oil in the mini. Again, this is the mini contract. And when you start seeing this, where there's very few trades in a 2-minute period, you start moving off it. So let's look at the 5-minute, okay? The 5-minute is down here. Okay. This right here, well, I'm not going to go into it. Well, I'll go into it a little bit. Here is now I'm not sure, I wasn't living this trade, but this, of course, is one of our signals of which you would have 1, 2, and you may have gotten out here, but we have a way of staying in this in the nuance, and you would have used that nuance here, and you would have been in this all the way up. But I don't want to say, that you would have been in when it's not obvious to you. Here's a sample of what you would have been in on right here. Okay, you would have been in here. Okay, buying 2. You would not have been in here because this body is not big enough compared to this right here. Okay, so here's a doji, a bunch of dojis followed by a movement down, selling 2 here. You would have put I think you would have gotten your scalp here. I'm not going to measure it because I want to keep going. But if not, you would, again, there are no 2 trades above. And this happens a lot. 2 consecutive closes above, you're not getting them here. And so right here, if you didn't get your scalp out here, you would have gotten it out here. You would have moved to break even, of which you would have been stopped out of your break even here. This, depending on now you would have measured this. This looks like about 3.5 times. So depending on whether you decided 3 or 4 times, I'm not sure if that went through or not. Let's take a quick look. I don't want to linger on it. If it went through, it's a trade. If it's not, it isn't. And it looks like this trade may or may not have been working out. All right, let's look at that. So I love the crude. Crude really works well. But it works on stocks. This works on, I want to show you a stock that I've been trading because my wife really wanted to, she wanted a stock that had something to do with the, with current, what we're talking about here with the pandemic. This is BioNTech. look at this beautiful signal. Well, we had an initial signal here, doji or a small body compared to, or this may or may not, depending on, again, if you took the 3 or 4 times the body rule. But this definitely is a signal. It's not the perfect signal from the standpoint that, again, that I like to see it take out, but the fact that it's a short risk and the fact that looked like we've tested I'm going to take this out here. Let's, well, I'll do that later because this is not a trade for some. But this is a trade right here. And you don't need to take out the highs. Again, I like to see it. Sometimes it affects the number of positions that I take. But buying 2 here, you know, we've just tested this bottom, really nice trade. Buy whatever, 100 shares or 200 shares here or 500 shares, whatever it is. Again, you got to treat them as 2. Take out the scalp on some of those positions here. But look at this nice ride here. Nice reversal, okay, where you would have gotten your scalp out and then you would have been stopped out. Looks like at break even. This actually, for the more advanced people, is a signal, but I won't go through that. But this is buying tech. And you're going to notice that for your option traders out there, this signal, this trigger can be a really effective way of buying into options that when the premium is low, looking for an extension, etc., especially if the extension is strong. Okay, I am going to look to see if there are any questions right here again. Let's see. Simple system is too complicated, especially if you hold back and all that. Well, no. It says no, thanks, Ron. I'm giving you I'm giving you some of the nuances. The trading plan hopefully is very clear from the standpoint of when you take a trade, where you take your scalp and how you follow it. Okay, this is good. All right. All right. Well, that is where I'm going with it from that standpoint. Let me then. Well, I want to show you a couple of things because the time is getting a little bit short here. This is what this is what you get with the simple trading plan. You have your loaded gun explained, which I mentioned to you is it all fits on one sheet of paper. You download your plan on one sheet of paper, and then you have your videos where the loaded gun is explained there. Okay. Then you have your nuances, where these are the nuances that fit you as an individual and can keep you in trades or have you take more of the trades based on your personality and the way you like to trade without increasing your risk, okay, in these cases. So we've got all those nuances for you. And then we have the get-togethers where we meet every month, and we all of the people who are trading loaded gun. We have some people that are automating it. We have some traders that are building trackers around it. A lot of successful traders using it. We discuss it in these hour meetings so that everybody can learn more and more about how to utilize the basic trading plan and add or subtract any of the nuances that you're dealing with. Okay, so that's what we do in the get-togethers. And we've got certain bonuses. In fact, this particular bonus, somebody wrote a metastock on the loaded gun filter, how to filter out some of the trades on metastock based on the parameters that he chose as far as the basic core elements that you get in a single sheet that shows you the skeleton trading plan, and then whether you add particular nuances or not. And he shows you what he added, and then he built it on metastock. So we have a lot of contributors to the plan who are trading in, okay? And here is the page that you'll go to. I want to give you a deal on it for those people that are dealing with this particular presentation. Normally, we're talking about $497. For the sake of, these are case studies, some of the things that we've talked about here. You've got more case studies here. These are this is the one sheet of paper where you have your entry rules, your exit rules, and then you add or subtract your nuances based on the ones that fit your personality, okay? And then I wanted to show you this disappearing bonus real fast. This is a 30-minute one-on-one onboarding Zoom session with me. In other words, we get on I learn a little bit more about you. We get on one of these Zoom sessions one-on-one. We spend at least 30 minutes. Some of these go an hour. But I want to make sure that you're comfortable and understand maybe some of the nuances that would fit you, whether you should stick to the core trading plan by itself, or and so on. So we discuss some of the things, any questions that you have about running the trading plan. So I do that one-on-one with you. You get my guarantee. You've got 60 days with the trading plan to try it in sim, to try it to back test and so on, so that you understand how powerful this simple trading plan is. The simpler you can make the trading plan, I think you're going to see the better. Here's some recent testimonies that just came in last month. I'm not sure if you're reading this, but I'm now using Loaded Gun exclusively. I thought my problem was psychological when in fact my system didn't work. I can't thank you enough. Here are those completed trades from earlier. I wanted to show you the Loaded Gun works on FX too. So here's somebody that uses it on FX, Ted, who's a very strong advocate of the program. When you check out, I want you to use the code Seniors Unite. You're going to go to simpletradingplans.com, okay? Simpletradingplans.com, and then you're going to use the code Seniors Unite. And when you do, and you apply the code, you'll get $100 off. So instead of $497, it's going to be $397 for you. Okay, so Seniors Unite and simpletradingplan.com. I wanted to show you that. Here is the official offer for you. Again, simpletradingplans.com to get your $100 off. Seniors Unite. You've got 60 days to work with this. Okay. And of all of the trading plans that we've sold, the Loaded Gun trading plans, we've only gotten a handful of people that have returned it, and the majority, and of those handful, it's usually a health situation. I guess maybe it's from working with seniors. But again, you don't have to give me an excuse. If this is not one of the best trading plans that you've ever seen, it's something that you don't think that you could feel comfortable in running after you've back tested it and you've forward tested it in sim, then I don't want your money. Have it back. And I call it a vanishing bonus because we just finished the one-on-one coaching that we've been doing. So I've got a little bit of time to do these 30-minute one-on-ones for the next month or a month and a half. So it's vanishing because there are only a certain amount of spots in the calendar. Once you sign up, you're going to be given a calendar, and you can make your appointment with me for the one-on-one. So I call it vanishing because that bonus is going to vanish when the calendar fills up. Okay, so again, simpletradingplan.com. Use Seniors Unite. Okay, let's get back to the charts. Let's look at, I showed you buy in tech. This is, if you are somebody who trades, who wants a way to trade the Bitcoin, I always like to show this because the Grayscale Bitcoin Trust, GBTC, is a great way to trade Bitcoin. But look at the Loaded Gun. Look at the signal that it gave you here. This is a daily chart. Look at the signal that it gave you here. Again, the fact that I like it taking out all these highs. You've got a little doji, and look, it got the entire move on this. Okay, you had once below. Looks like we may be getting out of our second, if this thing closes down here. Okay, this is a more complicated signal, but again, if you don't follow the basic trading plan, if you haven't added any nuance, see, this is a kind of a skip where the market gaps. But I don't want to talk about that. I want to talk about the basic, because a lot of people just run the basic strategy. And here's a basic strategy right here: doji followed by a move through, which resulted in the scalp, and then on this move here you broke even on the second, but then that followed with this huge move. This is a doubling, more than that. Yeah, this is over a doubling of your money. And if you're an options player, this is the area where you would have really cleaned up. So I wanted to make sure that you saw that it works on other markets. Maybe one more while I got you here, because I saw somebody talking about does it work on currencies. I often trade the yen. I haven't in a while. So let's take a look at here's a 10-minute chart, and here's a signal right here. On the 10-minute chart, okay, right? You have your you have your small body followed by the movement through. It's 3 or 4 times as big, so we're good here. You sell 2 here, stop up here, take out your scalp here, again, equal measure. And this is not a reversal signal, of course, because his body's much too big. But this is the first close above, second close above, so you have your second one here. And let's take a look and see if we've got any other signals. This is a possible signal right here that would have been a loser, but a very short loser, okay? Here is again, you'd be measuring your risk, but you would have taken your scalp out up here from this measurement here, and then you would have been break even here on your second. This is not a signal because this body is too big compared to the second. This is not a signal. Again, this is a body is a little bit too big. So no other signals here, but let's look at the 5-minute. This is the Japanese yen. This is the one I kind of like to trade. And I'm not seeing, here's a signal right here that would have resulted in, again, 1 close above, but not a second close above. This would have resulted in a nice big trade here. So works very, very well on the Japanese yen. I also like the euro. Euro's given a lot of action. For those on the daily side of it, not much here. Here's a trade right here that you would have had the scalp. Another trade right here where you would have had the scalp. You wouldn't have been knocked out here. So we've got a lot of, it applies to currencies. It applies to tick charts, not just charts like this where you're dealing with just the body. Okay, well, I think that's about my time. And I just wanted to make sure that everybody got the opportunity to go to simpletradingplans.com, get the $100 off, test this system for yourself. I think you're going to love it. David, I think that's it for me.
Thank you, Norm.